This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices fell by more than $5 on Thursday on higher U.S. gasoline stockpiles and after an ECB rate hike stoked demand worries, while returning oil supply from Libya and the resumption of Russia's gas flows to Europe eased supply concerns. Brent crude futures lost $3.10, or 2.9%, to $103.82 a barrel by 11:43 a.m. Eastern Daylight Saving Time, 14:43 GMT. U.S. West Texas Intermediate crude CLC1 futures were down $3.66, or 3.7%, at $96.22 after a 1.9% drop. Both were down more than $5 earlier in the session. Oil futures trading volumes have been thin and prices volatile as traders attempt to square weaker energy demand with tighter supply resulting from the loss of Russian barrels after the country's invasion of Ukraine.
A European Union proposal that member countries cut gas use by 15% to prepare for possible supply cuts from Russia is facing resistance from governments, throwing into doubt whether they will approve the emergency plan. The European Commission proposed on Wednesday that all 27 EU countries use 15% less gas from August to March compared with the average over the last 5 years. The target would be voluntary, but the EU could make it mandatory if Brussels declares a substantial risk of gas shortages. At a meeting of EU national diplomats on Wednesday, at least 12 of the 27 member states raised concerns about the proposal, 5 EU officials with knowledge of the meeting told Reuters.
Moving on to the top news in the energy sector.
The United States hopes to see a global price cap on Russian oil introduced by December, U.S. Deputy Treasury Secretary Wally Adeyemo said on Wednesday. "We are following on what the Europeans have done," he told the Aspen Security Forum in Colorado. They introduced the idea of looking to do a price cap, but they also said by December, they plan to put in place their insurance ban.
Top Western energy companies are expected to unleash billions in returns to shareholders when they announce what is set to be a second straight quarter of record-breaking profits, lifted by stellar refining margins and high oil and gas prices. A rapid recovery in demand following the end of pandemic lockdowns and a surge in energy prices, driven by Russia's invasion of Ukraine, have boosted profits for companies such as ExxonMobil and Shell after a 2-year slump. Exxon earlier this month said it could post its strongest quarter yet, with profit potentially surpassing $16 billion, almost twice its first quarter earnings. Next, we have the top news in metal markets. Gold prices touched a more than 1-year low on Thursday as the prospect of aggressive policy tightening by major central banks weighed on the non-interest-bearing metals appeal, while investors awaited European Central Bank's policy announcement. Spot gold fell 0.8% to $1,682.49 per ounce by 11:06 GMT, hitting its lowest level since end March 2021. U.S. gold futures fell 1.2% to $1,680.10. The ECB was earlier signaling a 25 basis point interest rate hike at its policy meet on Thursday. However, a bigger-than-flagged move is also seen as likely amid soaring inflation.
Substantial new nickel supplies from top producer Indonesia in years ahead will ensure prices don't return to levels that sparked chaotic trading in March, despite robust demand growth from stainless steel and electric vehicle battery makers. However, prices now around $21,000 a ton on the London Metal Exchange, LME, though down about 80% since hitting all-time highs in March, are still high enough to incentivize investment in new production capacity. Nickel prices on the LME started their ascent in January as stocks in LME-approved warehouses started to slide due to soaring demand from battery makers.
We will now look at the top news in the agricultural sector.
Malaysian palm oil futures tumbled more than 5% on Thursday, tracking losses in crude futures and rival edible oils, while traders booking profits after recent gains also weighed on sentiment. The benchmark palm oil contract for October delivery on the Bursa Malaysia Derivatives Exchange slid 213 ringgit, or 5.41%, to 3,722 ringgit, $835.47, a ton. Palm swung lower in a week of fluctuating trade, but overall sentiments appears to be turning positive though still highly cautious, said Sathya Varka, co-founder of Singapore-based palm oil analytics.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.